You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Okay, so let's unpack this. Do you ever feel like the news is just a constant fire hose of information? You know, headlines flying at you from every corner of the globe. It feels impossible sometimes to keep up, let alone really connect the dots and figure out what actually matters. Well, you're definitely in the right place then. Today, we're doing a deep dive into this really comprehensive global markets and geopolitics briefing that you've shared with us, our mission. It's not just about relaying the news. We want to cut through all that noise, pull out the most important bits of knowledge, maybe uncover some surprising facts along the way, and basically give you a shortcut to being genuinely well-informed about what's happening with, currencies, commodities, trade, geopolitical hotspots, sort of the works. Think of us as your expert guides for today. We're here to help you understand not just what happened, but crucially why it matters to you. So yeah, let's pull back the curtain on these global currents. Right, let's kick things off with what you might call the pulse of the global economy, the foreign exchange markets. Currency movements, they're like this constant global survey of economic confidence, aren't they? So what shifted this week? And what bigger trends might these, sometimes subtle changes be hinting at? Our briefing details some really fascinating movements. The U.S. dollar, for instance, it largely held its ground after some recent weakness. Looks like traders are really focused on a bunch of key data releases this week. We're talking Bureau of Labor Statistics, benchmark revisions. Those can really change the picture on jobs data. Then there's the Producer Price Index, PPI, wholesale inflation. And of course, the big one on Thursday, the Consumer Price Index, CPI. Consumer inflation, those numbers are really going to set the tone, I think. Now, here's a bit of a twist. The euro actually had extended some modest gains, which is pretty interesting when you consider the political turbulence, right, over in France.
Yeah, with Prime Minister Bayrou losing that confidence vote. That's right.
Exactly. And President Macron's expected to name a new PM very soon. So a bit of drama there, but the euro held up. Then you look at the Japanese yen. It slipped a bit further below the 148 level. That follows Ishiba's resignation last week.
Although the stronger GDP revisions did help put a floor under it, didn't it?
They did, yeah. Limited the downside. And sterling.
Sterling found, slightly firmer footing around 1.35.
Right, but the briefing notes that upside seems capped. Not many big domestic catalysts is expected before the UK GDP figures later this week.
True.
And finally, looking a bit further afield, the Aussie and Kiwi dollars. They got a bit of a lift from firmer Chinese yuan guidance.
China signaling a stronger currency tends to help those commodity exporters.
Exactly. Like Australia and New Zealand heavily exporting to China. Though, to balance that out, sentiment there was apparently a bit restrained by some weaker consumer data out of Australia itself.
It really is quite striking, isn't it, to see how fast political events like that confidence vote in France you mentioned, or a resignation in Japan, how quickly they can ripple through major currencies. But as you pointed out with the euro, the reaction isn't always, a simple plunge or surge.
Right.
A key insight here, I think, is that sometimes the markets have already kind of priced in that expected political instability. Or maybe they're looking past the immediate drama, looking towards the underlying economic fundamentals that might still be pretty robust. So the euro's resilience, it might suggest investors see the French political shuffle as, contained, or maybe just less impactful than the broader health of the Eurozone economy overall.
That makes sense. So it's not always a direct cause and effect.
Exactly.
Yeah.
And it leads us to think, okay, how much are these currency moves really driven by the hard economic data points, and how much is it the more sort of elusive forces, political sentiment, market anticipation, things like that. They're like tiny seismographs, as I said, or maybe global confidence vote. They reveal where investors think stability and growth prospects lie.
Yeah.
And for you, the listener, these aren't just abstract numbers floating around. Currency shifts, they directly impact your purchasing power, right? The cost of imported goods, the competitiveness of exports. Ultimately, it affects everything from, your holiday budget to the price of your morning coffee.
That really puts it into perspective. It's this dynamic interplay, isn't it, between the hard facts and that softer sentiment. But look, the story gets even more complex when we move beyond just currency shifts. We're seeing continued friction really dominating the world of tariffs and trade, and it's often deeply tangled up now with national security and technology issues. Our briefing points out that U.S.-China negotiations, they seem to remain stalled.
Still stuck, yeah.
Yeah, with a particularly difficult impasse specifically over fentanyl-related provisions, which shows, I mean, this isn't just about trade anymore. It's public health, it's national security, all intertwined in these really complex ways.
Definitely.
Then you look elsewhere. Japan's negotiator confirmed U.S. auto tariffs will be lowered by mid-September. Okay, that's a positive signal for the car industry.
Though the broader talks are still ongoing.
Still unresolved, exactly. And South Korea. They're resuming talks with Washington, but interestingly, they've specifically highlighted concerns about capital market impacts tied to that huge U.S. $350 billion package.
Right, that's a massive figure. And the potential impact on capital flows, investment into South Korea.
Yeah.
It shows how policy in one place can really ripple outwards.
Absolutely. And then on the tech front, which is just fascinating, the U.S. FCC, the Federal Communications Commission, is moving to revoke recognition of 7 Chinese test labs. And this isn't just about market access for these labs. The briefing says it's explicitly on national security grounds.
Which really underscores that point, doesn't it?
It does. It shows how this battle for tech dominance, for control of critical infrastructure, is playing out in very concrete actions.
Indeed. What's particularly striking to me here is how national security is increasingly woven into almost every discussion. Technology, trade, even public health, like you said, with the fentanyl impasse. It's really not just about optimizing the flow of goods anymore, is it? It's about strategic competition. It's about controlling critical infrastructure.
Yeah.
So actions by the FCC, for example, they seem less about protecting a domestic industry from, say, unfair competition, and much more about insulating the nation's digital backbone from potential vulnerabilities.
Right, insulating it.
And this throws up a really critical question for all of us, I think. Are we seeing a kind of full-blown retreat from globalization? Or is it perhaps something more nuanced, a sort of re-globalization?
Re-globalization.
Yeah, where trade and technology alliances are being redrawn, but along geopolitical lines. The long-term implications for innovation, for supply chain resilience, even just for the choices available to you as a consumer, they're profound.
That's huge.
These trade policies, these tech flashpoints, they directly impact the global supply chains that bring you goods. They affect prices, availability, and even the security and reliability of the digital tools you use every single day, your phone, your cloud storage. It's a fundamental reshaping, potentially, of how the world does business.
A re-globalization along new lines. It's a really powerful way to frame it. Okay, shifting gears now. Let's turn our attention to commodities. You know, the essential resources, the precious metals. They often tell us a demo story about global demand, supply, and investor sentiment.
Always fascinating, yeah.
And our briefing gives us a snapshot of some key movements here, but they offer kind of conflicting signals, don't they?
They do seem a bit mixed.
Take oil prices. They edged a bit higher after OPEC, plus that's the Organization of the Petroleum Exporting Countries, plus its allies confirmed a modest production hike for October. About 137,000 barrels per day.
A modest hike, yep.
But then that upward momentum was kind of tempered because Saudi Arabia actually lowered its official selling prices for Asia and Europe.
Which is interesting. It signals that delicate balance, right?
Exactly. OPEC Plus is increasing supply overall, but it looks like Saudi Arabia might be responding to potentially softer demand signals, or maybe increased competition in those key markets, especially keeping an eye on Asian and European economic health.
Managing supply versus demand signals.
But then you have spot gold. Wow, this is a real headline grabber. Climbed to fresh record highs, above $3,600 an ounce.
Incredible levels.
Supported by a few things, apparently. Weaker dollar moves helping, a clear surge in safe haven demand, people getting nervous.
And central bank buying, crucially.
Yes. Ongoing central bank purchases. The briefing specifically notes the People's Bank of China, this is their 10th consecutive month buying gold.
10 months straight. That's significant.
It really is. And then, sort of caught in the middle, was copper. Pretty much range-bound, pulled between weak Chinese trade data, which hits industrial demand.
And softer U.S. yields, which can influence investment flows into commodities.
Right. So a bit of a tug-of-war there for copper.
These contrasting signals from commodities, they are quite telling, aren't they? Gold hitting record highs, especially with that consistent central bank buying. It feels like it goes beyond just general uncertainty.
What do you mean?
Well, it really underscores, I think, a pervasive sense of geopolitical risk, and maybe a subtle, perhaps surprising move by some central banks to diversify away from traditional reserve assets like the dollar, or maybe just hedging against perceived long-term inflation risks.
Ah, diversifying reserves. Interesting point.
It suggests that even with some market optimism floating around, there are these significant, deeply held anxieties about economic stability and geopolitical risks that just aren't going away. And that ongoing strategic buying, like from China's central bank, that's maybe a less obvious indicator of global economic shifts than just tracking individual investor fear through, say, ETF flows.
That's a great insight, looking beyond the surface noise.
And the oil situation, as you laid it out, OPEC plus nudging output up, but Saudi Arabia trimming prices for key regions. It just perfectly showcases that complex tightrope walk, doesn't it? Trying to manage global supply while reacting to these nuanced demand signals from major consumers.
A constant recalibration.
Exactly. And the consequences are direct for households. Commodity prices affect everything, right? Gas at the pump, electronics, construction materials, even the food you buy. And gold, as we discussed, it really serves as this powerful barometer of global fear and uncertainty, influencing everything from investment strategies right up to national reserves.
It is fascinating how these raw materials paint such a complex and sometimes contradictory picture. Okay, now we move into perhaps the most high-stakes arena, geopolitics. Our briefing paints a picture here of, well, elevated tensions across several critical regions. It's a landscape that's constantly shifting with really profound implications.
Yeah, definitely high stakes.
In the Middle East, the situation remains extremely tense. We see reports of Israeli forces preparing for a ground maneuver into Gaza. Prime Minister Netanyahu has issued a warning to residents there to leave. On another front, Israeli airstrikes also apparently targeted sites inside Syria. And then, interestingly, a diplomatic move. UK Prime Minister Starmer reiterated his intention to recognize a Palestinian state, a move welcomed by Palestinian President Abbas.
That's quite significant, coming from a major power like the UK.
It is. It could shift the diplomatic landscape, couldn't it? Put pressure on other nations, maybe alter the dynamics of future negotiations.
Potentially, yes.
And looking ahead, there's a meeting scheduled. Iran's foreign minister is due to meet the IAEA chief, Grossi, on Tuesday. But those talks seem contingent on progress over nuclear access.
Right, specifically monitoring Iran's nuclear facilities. Still complex, still lacking transparency, it seems.
Always a point of tension. Okay, moving over to the Russia-Ukraine war. Kyiv has warned of looming shortages in air defense systems. That's critical, especially as U.S. aid deliveries face delays.
A major concern for them, obviously.
Yeah, absolutely. And over the weekend, sadly, a Russian missile struck a government building in Ukraine. Moscow also claimed further territorial gains in the Dnipropetrovsk region.
And in response, more sanctions coming.
Seems so. Washington and Brussels are coordinating on fresh rounds. The EU is specifically prepping its 19th package, targeting Russian banks, energy flows.
19th package. That number alone tells a story of sustained pressure, even if the impact is debated.
It does. Okay, elsewhere in the world, North Korea has been active. They carried out solid fuel engine tests, Leader Kim calling it a major step in strengthening their nuclear capabilities.
And solid fuel is significant, right? Faster deployment, harder to track before launch.
Exactly. Makes them much more dangerous. And in a related development, President Xi sent congratulations to Kim on North Korea's founding anniversary, pledging deeper cooperation between Beijing and Pyongyang.
Highlighting those strengthening regional alliances. A clear show of support despite international condemnation. You know, what's particularly striking here is just the sheer density and the interconnectedness of all these global flashpoints.
It feels like everything is linked somehow.
It really does. This isn't just about isolated regional conflicts anymore. It's about how actions in one region can send these ripple effects across entire continents, influencing global alliances, raising the potential for broader destabilization, the coordination of new sanctions by the U.S. and EU, for instance. That reflects that continued effort by Western powers to exert economic pressure. But conversely, you see the strengthening ties between North Korea and China. That illustrates the complex, evolving dynamics of global power structures, maybe consolidating an alternative geopolitical bloc.
A counterweight.
Perhaps. And it leads us to ask, how do these regional conflicts and the responses of the major powers, how do they really influence global alliances? What's the potential for wider destabilization? Especially when you consider this complex interplay between different power blocs. And just to be clear, Our role here, as always, is just to convey the information from the sources impartially. We're reporting the stated positions, the reported events. We're not endorsing any particular viewpoint.
Absolutely. Crucial point.
But for you, the listener, understanding these geopolitical hotspots is just vital for grasping the human stakes, the global stakes, and how these conflicts can impact international relations, trade routes, even global stability in ways that might directly or indirectly touch your life, from the cost of goods right through to the security of nations.
It's a very stark reminder of how interconnected our world truly is. Okay, finally, let's bring it a bit closer to home for many of you. Our briefing also highlighted some key domestic pressures, specifically in the UK, that kind of reflect broader challenges we're seeing in many developed economies.
Right, the balancing act.
Exactly. Chancellor Rachel Reeves is expected to urge ministers to keep inflation as the absolute top priority when the cabinet meets today, which really underscores that ongoing battle against rising prices, doesn't it? Suggests a continued focus on monetary tightening, maybe at the expense of other economic goals.
Potentially slowing growth further, yeah.
And supporting that concern, consumer spending in the UK apparently slowed sharply in August, highlighting those very real, ongoing domestic economic pressures. Households grappling with higher costs, maybe tighter credit conditions.
Yeah, the UK's situation, prioritizing inflation control while consumer spending is slowing. It's quite indicative, isn't it? It's a challenge so many developed economies are facing right now. How do you balance price stability with economic growth without tipping over into a recession? It's a very, very delicate act, a real tightrope walk.
It really is.
And it raises that important question. What specific policy levers are governments actually willing to pull? And maybe more importantly, how long can policymakers realistically sustain this kind of balancing act before either, consumer confidence completely erodes or the economy faces a much more significant slowdown?
Tough choices ahead.
Definitely. And these issues, inflation, consumer spending, they directly affect household budgets, job security, and they reflect the complex choices facing policymakers in similar economies all around the world. It's like a global balancing act playing out on these domestic stages.
So after all that, what does this all mean? We've really taken quite a fascinating global tour today, haven't we? From those subtle shifts in currency values, the evolving landscape of global trade, right through to the high-stakes world of commodities and geopolitics, all distilled from the latest briefing you shared with us.
Quite a journey.
It was, and our aim really was to give you a clear, concise understanding of these complex, often interconnected events, to help you cut through that noise and maybe spot some of the unseen currents shaping our world. We genuinely hope you've had some true aha moments today about how these seemingly disparate events are actually all woven into this single evolving global narrative.
Which leads us, I think, to a final crucial question, something for you to consider as you move forward from this deep dive. How do all these ongoing developments we've talked about, from a central bank strategically buying up gold to a political reshuffle in France, new sanctions against Russia, and North Korean rocket engine test, how do they collectively shape the coming months? How do they influence not just global stability, but also the very fabric of your daily economic life? And maybe what might be the less obvious, the longer-term implications of these trends, especially as we see critical inflation data continuing to emerge and these geopolitical alliances solidifying or maybe shifting.
That's a powerful thought to end on. How do all these threads weave together? We really hope this deep dive has given you some truly memorable insights today and maybe a clearer lens through which to view the world. Stay curious, everyone. Stay informed, and we'll see you next time for another deep dive.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.